Well, welcome back to TNL Mediagene's channel, Asia's next generation media and data analytics company, trading on the NASDAQ under TNMG. We're privileged to be joined by Joey Chung, the co-founder and CEO, to talk about earnings, the convertible note overhang, and just give investors an idea of what's going on. But welcome back, sir.
Yeah, great seeing you again, Kyle. Thanks for having me.
Always a pleasure to get you back on. I guess before we discuss the H1 numbers here, maybe talk about the convertible note overhang. I know this is a big deal for the stock shareholders. Maybe tell us what's going on.
Yeah, I think we're very proud and very happy to have finally reached this milestone. So, as with many, I guess, recently, de-SPAC companies or small cap IPOs that went through a de-SPAC during the IPO process, we had a convertible note in there to kind of help pay down the initial public company fees and the initial IPO process. And it was like a $4 to $5 million note. And of course, that was causing some stock dilution and overhang over the past few months. And so, gradually, month by month, we were paying that down, and we're very happy to finally say that after the past few months, that remaining final balance has been paid off, which is why we announced this very important and major milestone news earlier, that entire overhang, that a convertible note, that stage of the company is now done with, and we're very eager and excited to communicate that message to the market and really kind of focus now on the actual execution and the operational side of the business.
Yeah, I appreciate that. And speaking of the operational front, revenue came in at 21.8 million, up 5.7% year over year, with positive momentum in your technology and digital studio side of the business. You're still operating at an adjusted EBITDA loss of 3.2 mil, but maybe give us an idea of what's going on just from the fundamentals there.
Yeah. So as you broadly mentioned, yeah, year over year, we're still growing, even amongst all the AI SEO disruption. We're very happy with that. I think the best signal and best sign is the fact that even though the media part of the business, is being affected by AI SEO and AI disruption, the tech and data part of the business is growing much faster and actually ahead of budget. So I think that's kind of a signal of things to come, in that one third of our revenue is roughly media advertising, one third of it is tech and data analytics, and one third is digital studio agency and different e-commerce services. But the tech and data part of the business, as we projected, is now growing faster, and that will definitely be the future revenue driver in the foreseeable future as we're able to leverage our 40, 50 million readers into data sources for zero party, first party, and third party data to then monetize either through MarTech, AdTech, or data analytics. And we're seeing that investment over the past 1 or 2 years really pay off this year. So in many ways, it's kind of almost hedged against each other, where even if one part of the business, the media advertising, is affected like everyone else, the tech and data is able to take that and run with it and truly grow. And we're very excited about that signal going forward.
Yeah, and just finally here, what should investors pay attention to? Maybe just give us an idea of what's going on with the outlook for your second half.
Yeah, so I think for internally for management over the past few months, our super majority of our time, energy has been how to focus on paying down this convertible note as fast as possible. So if we were kind of abnormally focusing a lot on external financing and getting through this milestone, I think now is the true starting point. Now is that point where we finally kind of gotten out of that stage. We're very excited to finally be at a more normal starting stage, and really focus on operations. So everything that we mentioned earlier to describe the business in terms of tech and data as a future revenue driver, in terms of previous plans for M&A. We've always been an M&A roll-up strategy company. We've on average done 2 acquisitions every year. Now that we're finally out of that bottleneck at that stage, we're happy to continue doing the next 1 or 2 acquisitions that we already have lined up, and just really focus on going back to the core fundamentals of making the company profitable as fast as possible, focusing on the financials, focusing on operational synergies and efficiency, trying to lock down those next 1 or 2 acquisitions, and really growing the tech and data part of the business as we kind of finish that Pan Asia story and truly finally take that next few steps forward to create the largest Pan Asia media, tech, data, AI, and e-commerce group of companies. So we're very excited to have finally reached that milestone and really focus on future execution plans going forward.
Yeah, appreciate the insight, and I'll pass it off to the viewers as always. We'd love to know what you think, but consider subscribing as news and catalysts like this come down the wire. Of course, we'll bring it to you here. But on that, as always, we look forward to catching you in the next one.